Hey everyone, and thanks for jumping back into the cryptoverse. Today, we're going to talk about Bitcoin, and we're going to be providing an update to the bull market support band. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and remember to check out the sale on the premium list at intothecryptoverse.com. Today is the last day to sign up for if you want to lock in low rate. So in a few hours, maybe in about 12 hours or so, we'll go ahead and end that sale. So now's the time to sign up if you've been waiting on that. Let's go ahead and jump in. So we always like to provide an update to the bull market support band. And again, remember, when we are below it and failing to hold it as a support, especially when we get above it, you are better off thinking about it in terms of a bear market resistance band. Again, I don't, these are just long-term rules I play by. And we understand that over the last 4 months, Bitcoin has been respecting, say, resistance levels, right? Like the 200-day SMA, right? It's been respecting resistance levels a bit more than it has been respecting support levels like the bull market support band. Okay, so with that in mind, we understand that it's still our line in the sand in order for us to get back above and hold it as support. Now remember, if you close above it, it doesn't mean anything if you don't actually hold it as support. And one of the things we said a couple weeks ago, in fact, is that because we did not see any follow through on the candle on the open above it, it was not the best sign, right? You typically want to see follow through when you break through the bull market support band. You want to see us show that strength and then to come back down maybe a month or two later, not to come back down and retest it like the following week. That is typically not a good sign. Okay, so we've fallen back below. Where is it today? As of today, the 20-week SMA is now at 42.4K and the 21-week EMA is at 43.3K. So basically it ranges from 42 to 43K. Is now our line in the sand in order for the market to actually get bullish, right? 42 to 43K. Now, the thing to remember here is that these moving averages are going to continue decreasing for a little while longer. You can understand that by just looking back 20 weeks and saying, all right, well, as long as the price down here, as long as we're replacing, say, prices at around 50K with prices that are, say, around 40K, we understand that the 20-week SMA is still going to remain in a downtrend for a little while. Okay, so the 20-week SMA remains in a downtrend, and now the 20-week SMA is now at approximately 42K, and 42K is an interesting level, as we know. That is the local top that we saw back in January of 2021. So the 20-week SMA is coming down to that level. So that should be an interesting area to see if we can, in fact, come back up to. Another thing I was looking at is, when looking at weekly candles, we just had 3 weekly candles in a row that are red. And I was curious, like, well, when's the last time we had 4 in a row that were red? Because you don't often see 4 red weekly candles in a row. I mean, again, this current one just opened up and it's currently green right now. So, how many times do we see, or how often does that occur where you see 4 red in a row? And I think, I mean, again, unless I miscounted, I think you'd have to go all the way back to 2020 to find the last time that we had 4 reds in a row. And then before that, I think you'd have to go to 2019. In late 2019, we had a couple phases where we had 4 reds in a row. And then what I thought was interesting was that in 2018, even though it was a bear year, we never even had 4 weekly red candles in a row. So maybe this week will be a green week after coming off 3 red weekly candles. But I think if it is a green week, just remember this, okay? It doesn't mean a thing if we're not above the bull market support band. And even if we get above it, we need to see follow through. Until that happens, being somewhat cautious, sort of like you don't even roll over bed for a $43,000. You don't roll over in bed for a $43,000 Bitcoin, because unless we break through, doesn't mean a thing. Okay, just doesn't mean a thing. We of course want Bitcoin to go higher. We also have to respect what the chart. I mean, the charts right now are showing that the 42 to 43K level is in fact the line in the sand for us to break. So if we do get some type of a rally this week back up to the bull market support band, just remember that's where we would need to break through. And also do remember that the price to get back up to that level, we would need to see about a 6% move to get to the 20-week SMA and about a 9% move to get to the 21-week EMA. So it would be a nice move if we can in fact muster up the courage to go back up to those levels. All right. Now, I do think that, right now Bitcoin is sort of trying to hold this line. Everyone's watching. We'll see if it holds. I might expect at least some type of a balance before we figure out what way we're going to go. But this is the line that it seems like everyone in crypto is watching right now. Is it going to hold or not? Do note that if it doesn't hold and if Bitcoin puts in a lower low, it would make it very, very difficult for all Bitcoin valuations to do well in a scenario like that. But for now, this is your update, right? I mean, bull market support band, probably better off thinking about it as a bear market resistance band until proven otherwise. And I understand some people don't like the term bear market, but it's my channel. It just is what it is. I don't control what it is. I think that when it's funny because in crypto, when my portfolio goes down, 40% or something, I don't look at that and call it a bull market. But I understand there's different ways that people can look at the market. But regardless, I think that Bitcoin has quite a bit of work to do for us to actually feel that bullish sentiment to return. And as of this week, the line in the sand is 42 to 43K. Thank you guys for tuning in. Make sure you subscribe. Check out the sale on the premium list into thecryptoverse.com. We're going to run that sale just for another few hours or so, just to make sure everyone has the chance, because the sale does end today. And again, you'll get access to a website. We have reports, charts, all sorts of charts on-chain stuff, logarithmic regression, return on investment, derivative data, social metrics data. We're starting to add NFT data as well. 3 weekly videos a week. Again, if it's not your thing, you can always cancel. No hard feelings, right? And some people have asked me, should they sign up if the amount represents a large percentage of their portfolio? No, you shouldn't. Okay, so if you're a smaller investor, and there's nothing wrong with that, right? All of us started off being small investors. If you're a small investor, I would actually recommend you not signing up for it, to be completely honest, right? You're probably just better off DCAing into the market, into whatever you want. It's just for people who want a bit more, and to try to provide those tools for them. If you're not on that, if you're not in that group of people, then you're better off just sticking to the public videos. To be blatantly honest, right? But anyways, I think we'll wrap it up there. Make sure you subscribe at the very least. Give the video a thumbs up. I'll see you next time. Bye.